Have you ever felt like you're just uh, drowning in information? Caught in this constant flood of news alerts, especially in areas like tech and finance that move so incredibly fast.
Oh, absolutely. It's relentless.
Yeah, one minute you're trying to get your head around some new AI thing. The next, you see these headlines about crypto markets tanking, and it feels like everything you thought you knew is just gone.
That's a lot to keep up with, definitely. Overwhelming is the right word.
Right. Trying to keep pace, let alone really understand what's happening, and maybe more importantly, why it should even matter to you.
The context is key.
Well, welcome to the deep dive. That's exactly our mission today, to try and cut through some of that noise.
Get to the signal, hopefully.
Exactly. We're going deep on two really fascinating areas. First, cybersecurity, specifically how AI is just completely reshaping it.
It's a huge transformation happening there.
And then we'll pivot to crypto. That whole volatile world. We'll look at these recent dips and why they might not be what they seem. Maybe not the bad news people think.
Yeah, the narrative versus the data can be quite different sometimes.
So we've been digging through the latest insights, data, expert takes, trying to pull out the really vital stuff for you.
The nuggets, as you say.
Yeah. The goal is really to give you some clarity, maybe some confidence in these complex topics. So you understand not just the what, but the why it matters. Whether you're, in business dealing with digital risk or an investor watching trends, or honestly just curious about what's shaping things.
It impacts everyone in some way now.
It really does. Okay, let's dive in. So first up, cybersecurity. Let's unpack this. For ages, it felt like, this niche IT thing, right? Stuck in the tech department.
Oh, absolutely. It was seen as a technical problem for the tech team to handle. Out of sight, out of mind for many.
But the sources we looked at point to this massive shift, a fundamental change. What's really different now? What's pushed it front and center?
Well, it's the nature and the sheer scale of the attacks that have evolved so dramatically. It's really not just about a minor network glitch anymore or, an annoying virus.
Right, not just getting a weird email.
Exactly. We're talking highly sophisticated, often state-sponsored or large criminal organizations running these attacks. Think ransomware that doesn't just lock files. It cripples entire companies.
Wow.
Or incredibly targeted phishing scams, massive data breaches leaking millions of customer records, sensitive corporate data. These aren't just IT problems anymore.
They sound like business-ending problems.
They absolutely can be. The financial losses can be staggering. Millions, sometimes billions. And beyond the money, there's the brand damage.
Oh yeah, the trust factor.
Huge erosion of trust when customer data gets out. Plus, regulatory fines, legal costs. The stakes are just incredibly high now. It's moved cybersecurity from an IT task right into the boardroom. It's about financial health, compliance, reputation, everything.
That makes total sense. The threat level just went through the roof. And the numbers really back that up, don't they? This is where it gets, well, really interesting.
The growth is phenomenal.
Yeah, our sources are talking about staggering growth, a global cybersecurity market almost tripling in less than 10 years. What is fueling that kind of explosion?
It is dramatic. Fortune Business Insights, they're projecting the market goes from about $193.7 billion this year, 2024, all the way up to $562.7 billion by 2032.
Wow, over $500 billion.
Exactly. That's a compound annual growth rate, a CAGR of 14.3%. That's sustained high growth.
What's driving it?
Several big things, all interconnected. First, regulations. Think GDPR, CCPA. All these data privacy laws are getting stricter, forcing companies to invest or face huge fines.
Compliance costs.
Right. Then IT systems themselves are way more complex. Cloud computing everywhere, the Internet of Things connecting billions of devices, hybrid work models.
The attack surface is just massive now.
Precisely. Every connection, every device is a potential way in for attackers. And finally, the sheer amount and sensitivity of data companies hold today, customer info, intellectual property, it just has to be protected.
So companies have no choice, really.
Pretty much. And you see companies like Palo Alto Networks, Zscaler, CrowdStrike really leading the charge, building the kind of advanced defenses needed for these modern threats. It's a fundamental shift in business priorities.
Okay, so the threats are getting smarter, faster, more widespread. And you're saying traditional security tools, maybe the ones we relied on before, they're struggling. Playing catch up.
That's a fair assessment. Traditional tools often rely on what's called signature-based detection.
Like looking for known fingerprints.
Exactly like that. It's effective against threats we've already seen and documented,
Right.
but it's inherently reactive. It only finds what it already knows to look for.
So new attacks just walk right past.
Often, yes. Or they're detected too late. That's where AI comes in. It fundamentally shifts the paradigm.
How does AI make it proactive instead of reactive?
AI has this incredible ability to analyze just massive volumes of data in real time. Think network traffic, user logins, system logs, email patterns, trillions of data points. From that ocean of data, AI can spot subtle anomalies, complex patterns that hint at a potential threat before it actually escalates into a breach.
So it sees things humans or older systems would miss.
Exactly. Maybe a user logging in from a weird place at a weird time, or a tiny, unusual spike in data access from one server. Small flags, but AI connects the dots.
Catching it early.
Much earlier. It helps catch attackers earlier in the kill chain. That's the sequence of steps they take, from initial recon to achieving their goal.
Like stopping them before they even get properly inside.
Precisely. You disrupt the whole plan.
Yeah.
So AI turns security from reacting after an attack happens to proactively stopping it before significant harm is done. With the speed and volume of new threats, automation is essential.
And AI is the best way to automate that detection and response.
It's rapidly becoming the most effective, arguably the only viable way to keep pace. It lets companies get on the front foot instead of always playing defense.
That's a great analogy. Moving from just a guard at the gate to this, intelligent immune system sensing trouble early.
That's a good way to put it. It's more adaptive, more intelligent.
So it sounds like AI is really shifting cybersecurity from a static defense to something more dynamic. And you mentioned some companies are already heavily into this, upgrading their platforms.
Yes, several are leading the way.
Let's look at specifics. How are they actually doing this? What makes their AI different?
Right, and it's not just marketing fluff. They're genuinely enhancing their products, making them way more valuable for customers who need that preemptive protection. And of course, it strengthens their own position in this super competitive market.
Okay, first one mentioned is CyberArk. They talk about AI agents proliferating across enterprise environments. Sounds complex. What's their unified platform doing with AI?
CyberArk's strength is identity security, which, as we kind of touched on, is really the new perimeter. It's not just humans logging in anymore.
Right, you mentioned automation.
Exactly. You have AI processes, bots, automated scripts, all needing access and privileges.
Yeah.
These AI agents are everywhere now. Securing their identities is critical.
So how does CyberArk handle that?
Their platform does a few key things. First, AI-specific discovery. It finds all these non-human, AI-driven identities automatically. Then, strong privilege controls.
Least privilege, giving them only the access they absolutely need.
Precisely. Minimizes the damage if one is compromised. Then there's lifecycle automation, creating, managing, and crucially, removing access when it's no longer needed.
Cleaning up the digital ghosts.
You got it. And finally, governance, ensuring all this aligns with regulations and security policies. Their recent acquisitions, Venafi and Zilla, help them consolidate different identity tools into one stronger platform.
So they're like the identity passport control for this automated future.
That's a fantastic analogy, making sure every entity, human or AI, has the right access and is watched for weird behavior.
Vital stuff. Okay, next up. Fortinet. Big name, global leaders in network security. Our sources mentioned a key differentiator for them, high performance but at a lower cost. How do they manage that, especially with AI in the mix?
Fortinet's approach is quite comprehensive. They cover everything from next-gen firewalls, think really smart security gates, to endpoint security, all powered by AI-driven threat intelligence.
But the cost thing, how do they do high performance cheaper?
A big part of it is their custom hardware. They design their own security processors called FortiASICs.
Specialized chips.
Exactly. Optimized just for security tasks. This means super fast processing, better network performance, so customers often need less hardware overall, which lowers costs. Plus, their unified operating system, FortiOS, runs across everything, making it efficient to manage.
Okay, and how does AI fit into that efficient picture?
Their FortiAI platform uses deep learning, that's a more sophisticated AI, to automate threat detection and response. It's good at finding those brand new zero-day attacks that sneak past older systems.
Reducing detection time.
Significantly, from hours down to minutes potentially. And they integrate AI analytics into their FortiGuard security services. This isn't just reacting, it's predictive, trying to anticipate the next attack.
So performance, cost efficiency, and predictive AI.
That's the package. And their strong financials, profitability, good cash flow, it all points to high demand for this approach. That Zacks rank #2 buy status reflects market confidence they can really capitalize on this AI-enhanced security boom.
Very impressive balancing act. Okay, and then there's Okta. They have this unique focus on non-human identities. Sounds a bit sci-fi. What on earth are NHIs and why are they a big vulnerability?
Yeah, it does sound futuristic, but NHIs are very real and a growing headache. Non-human identities are basically anything needing access that isn't a person.
Like what?
Think service accounts that let applications talk to each other, shared accounts like admin, machine identities for servers, IoT devices, API keys for software integration, even those RPA bots doing automated tasks.
Okay, so all the background stuff that needs access, why are they a vulnerability?
The core issue is they often fly under the radar of traditional identity security, which is built around humans. They might not have strict password rules, multi-factor authentication, regular access reviews.
They get created and forgotten.
Often, yes. They become these digital ghosts, unmanaged access points, perfect targets for attackers. Compromise one, and an attacker can move around inside a network, grab data, escalate privileges, often completely undetected by human-focused security. They're hidden backdoors.
Yikes. So how does Okta tackle this?
Their privileged access and identity security posture management tools are built specifically to bring these NHIs into the fold, applying proper governance, strong security controls, monitoring their behavior for anything suspicious.
Extending security to the non-human.
Exactly. And their customer growth, 20,000 customers, lots with big contracts, Fortune 500 traction, shows how critical this problem is becoming. As automation and AI expand, securing these non-human access points is absolutely essential. It's a huge growing challenge.
That makes perfect sense. A critical, often overlooked area. Okay, let's completely switch gears now. Crypto.
The other hot topic.
Definitely. We've seen headlines about a pullback. Bitcoin dropping towards, what, $117,000, XRP down over 8% in a day. Looks scary on the surface. Is the bull run over, or is something else going on?
It's totally understandable to see red numbers like that and feel a bit nervous, especially after the big run-up we've seen.
Yeah, things are flying high.
They really were. Bitcoin, Ethereum, XRP, many had a fantastic few weeks. But often, after a steep climb like that, the market needs a breather. The technical data, though, really suggests this is a pretty normal, even healthy correction, not a big trend reversal.
A breather, okay.
Yeah, most of the top coins are down today, but that's common after strong moves up, especially when hitting resistance. It's mostly profit-taking. People who got in lower are locking in gains. Interestingly, traditional markets were mixed. S&P hit a record, NASDAQ slipped, so it wasn't just a broad risk-off affecting everything.
Okay, so if it's maybe not a disaster, what does it mean? The sources call it healthy consolidation. How can a dip be healthy, especially in crypto? Sounds wrong.
It does sound counterintuitive, but yeah, a dip can absolutely be healthy. Think of it like pruning a plant so it grows back stronger, or like a controlled burn in a forest clearing out dead wood.
Okay, I get the analogy.
This pullback shakes out some of the excessive speculation, the froth that builds up in a fast rally. It lets the market catch its breath, build a more solid base before the next potential move up.
So it's about sentiment.
Sentiment is key. Despite the dip, the overall crypto mood is still in greed, according to the Fear and Greed Index. It hit 70, the highest since mid-July.
Wow, still greedy even with prices falling.
Exactly. It suggests people were sitting on big gains, so it's natural some decided to sell and take profits. That selling pressure causes the dip. It clears out short-term players, lets the market consolidate, it's digesting the gains. And prediction markets like Myriad still show high confidence, over 70% odds on Bitcoin hitting 125K before 105K.
So the underlying belief is still bullish.
Very much so. It points to this being seen as a temporary pause in a bigger uptrend.
That's a crucial difference, profit-taking versus real fear. So beyond the daily charts and sentiment, what about the fundamentals? The bigger picture reasons for crypto's growth, are they still solid?
That's the really important question, right? What's the long-term story? And the answer seems to be yes. The fundamental drivers pushing crypto higher are still very much in place. Some are even getting stronger.
Like what?
Well, you still have ongoing developments like JP Morgan using crypto Bitcoin and XRP included as collateral for loans. That's huge validation from traditional finance.
Yeah, bridging the gap.
Exactly. And maybe even more significant is the regulatory progress. The passage of the Genius Act last week, producing a clear framework for stablecoin issuers in the U.S., that's monumental.
Why is that so big?
Because regulatory clarity is what big institutions crave. Wall Street has been hesitant partly due to uncertainty. Clear rules for stablecoins are expected to unlock significant capital flow from these bigger players into the crypto space.
Reduces the risk for them.
Precisely. It builds confidence, paves the way for mainstream adoption and deeper integration. So while prices might bounce around day to day, the underlying structural shifts driving growth forward seem very much intact. That's what supports a longer-term bull market, more than just daily candles.
That regulatory clarity angle sounds like a massive potential catalyst. Okay, let's zoom in on Bitcoin specifically. Get into the nitty-gritty. The sources say even with the close around $117,763, it's consolidation. What technical signs point to that conclusion?
Right, looking at Bitcoin's daily chart, you see that red candle, down about 1.87%. But the key is where it closed. It's still holding well above critical support levels.
So it didn't break anything important.
Exactly. It hasn't breached major support. It looks much more like the market just pausing after that recent strong run-up. It fits the pattern of consolidation within a larger uptrend. The underlying structure still looks pretty robust.
Context matters, not just the red number. Okay, what specific technical indicators are confirming this underlying strength, even with the price dipping?
Yeah, context is vital.
Yeah.
Let's look at a couple of key ones. First, the ADX, the average directional index.
Okay, what's that telling us?
For Bitcoin, the ADX is sitting at 29. That's important because anything above 25 generally confirms that an existing trend has strength, has conviction behind it.
So the uptrend is still considered strong.
According to the ADX, yes. It indicates that despite this pullback, the dominant upward trend is fundamentally intact. This drop is more likely a pause within that trend.
Okay, ADX shows trend strength. What else?
Let's look at the EMAs, the exponential moving averages. Think of these as smoothed out price lines over different periods, like 50 days or 200 days.
Right, the moving averages.
Bitcoin is trading quite comfortably above both its 50-day EMA, which is around $110,976, and its 200-day EMA, way down at $88,217.
And that's good.
It's very bullish. When the price is above both, and the shorter term, 50-day, is above the longer term, 200-day, that's often called a golden alignment. It signals that pullbacks are usually just temporary dips within a sustained uptrend. That big cushion above the EMAs gives bulls confidence that these levels will likely act as strong support.
Like a safety net below the current price.
Exactly. It suggests there's room to pull back a bit more without breaking the overall bullish structure.
Got it. So for people watching closely, what are those crucial support and resistance levels for Bitcoin right now? Where are the key lines in the sand?
Knowing these levels is definitely key for navigating the short term. For Bitcoin, immediate support is around $115,000. That's mostly psychological, a big round number people watch.
Okay.
Stronger support looks to be near $112,000. This area is significant because it's been support before. It's another psychological level, and it's close to that 50-day EMA we just talked about. So multiple reasons buyers might step in there.
A confluence of support and resistance.
Wow.
Where's the selling pressure?
Immediate resistance is up at $121,000. That's where the price got rejected recently, so sellers are likely active there.
The recent ceiling.
And strong resistance is the all-time high itself, around $123,091. Breaking decisively above that would be a very strong bullish signal, opening the door to price discovery.
Okay, clear levels to watch for Bitcoin. Now let's do the same for XRP. It had that sharper drop over 8%, down to $3.25, right after hitting a new all-time high near $3.60. Same story as Bitcoin, just amplified, or different factors.
It's largely a similar story, healthy correction, but yeah, amplified profit-taking because its recent run was so incredibly steep, almost parabolic. Hitting a new all-time high like that almost guarantees some selling pressure.
People cashing in big gains.
Absolutely. It's classic behavior after such an explosive move. But technically, it's interesting where it found support. It bounced right off the 23.6% Fibonacci retracement level.
The Fibos. You mentioned those, like natural bounce points.
Exactly. Think of them as mathematically derived levels where trends often pause or reverse. The fact that XRP respected the specific 23.6% level suggests technical traders saw it as a logical place to start buying the dip. It adds weight to the idea that this isn't a collapse, but a structured pullback.
That's fascinating how those levels often hold. So what about XRP's technical indicators? Do they also show underlying strength despite the bigger percentage drop?
They do, and in some cases, even more strongly than Bitcoin's, reflecting that more volatile, powerful trend it was on.
Really? Like what?
Well, look at the ADX for XRP. It's at 54.
Wow, 54. Bitcoin was 29.
Exactly. A reading that high is deep into what traders call power trend territory. It signals an exceptionally strong underlying trend. Experienced traders often see ADX readings above 40 during a pullback as a potential signal that the dip is a buying opportunity within a very powerful primary trend.
So the pullback might be sharp, but the underlying engine is still running very hot.
That's what the ADX suggests. Now look at the EMAs for XRP. Even after that 8% drop, it's still trading way above its 50-day EMA, $2.63, and its 200-day EMA, $2.25.
Still a big gap.
A huge gap. Its current price is nearly 25% above its 50-day EMA. That's a massive cushion and really demonstrates the fierce strength of the recent uptrend. It gives bulls a lot of confidence that there's significant support well below the current price.
Okay, powerful underlying trend signals there too. So finally, the key levels for XRP. Where are its support and resistance zones right now?
All right, for XRP watchers, these are the levels to keep an eye on. Immediate support is right where it bounced today, $3.25. That's that 23.6% Fibonacci level.
Holding for now.
Strong support comes in around $3. That's a major psychological round number, and it was also a key breakout point earlier, meaning it should now act as solid support.
Okay, $3 is the bigger floor to watch. Resistance.
The immediate resistance is $3.48, which was the high point earlier today before it fell further. Sellers are active there.
The intraday high.
And strong resistance, of course, is the new all-time high, around $3.60. That's the big target bulls need to reclaim and push past to signal the next leg up.
What a journey today. We really covered a lot, trying to cut through the noise on these two really dynamic fronts.
Yeah, cybersecurity and crypto both evolving so fast.
We saw how AI isn't just some add-on. It's truly transforming cybersecurity, making it proactive, intelligent, turning it into this huge investment area way beyond just an IT problem.
And companies like CyberArk, Fortinet, Okta are using AI in really specific, powerful ways to tackle those new threats, like non-human identities or zero-day attacks.
Right, and then we dissected the crypto pullback. Seeing how, for Bitcoin and XRP especially, the data suggests it's more of a healthy correction, a consolidation.
Within what still look like strong uptrends, supported by technicals like ADX and EMAs, and by those improving fundamentals like institutional interest and regulatory clarity.
It really makes you think, doesn't it?
Yeah.
In this world of complex systems, volatile markets, it brings up a big question. How can understanding the data underneath it all, whether it's AI's capabilities or crypto's chart patterns, how can that empower you?
Empower you to make better decisions, maybe. See beyond the headlines.
Exactly. To actually capitalize on what's happening instead of just getting swept away by the noise or the fear.
It's about building that deeper literacy, I think. Looking at the fundamentals, the technicals, not just the surface story. That gives you perspective.
Well said. We really hope this deep dive helped provide some of that perspective, some clarity, and maybe confidence. So maybe think about it this week, what other info you consume could benefit from a deeper look.
Critically evaluating sources, looking beyond the superficial take.
Yeah, it can really lead to a more nuanced understanding, help you make sense of all this complexity around us.